Week 2, halfway through the first month of being the chief executive trader, and we are on the scoreboard. So let's just quick summary on week 1. So week 1, bit of finding my feet, getting into the whole commotion of recording and not looking like an idiot and doing the right positions. So we ended up with a 10% loss. This was my initial trading capital. I had a 10% loss on that. Week 2 started off much better, and then it's almost like the second half of it became a bit choppy. But the good thing is, it's at the end of week 2, I got a little bit of injection from DXS as trading money. So I lost now 4% on week 2 of my total trading capital. So it's still okay. We have got some closed positions here. It's not a whole lot of profit, but there's something I want to show you guys what I think I've been doing a bit better recently. Okay, so this is my risk management sheet. All right, so in the beginning, I said I always want to close 50% of my trades in profit, and my risk reward must be 1 to 3. Okay, so let's assume my account balance is $1,000. This little calculation here also help with your trade size, with the position size you're taking with the leverage. So let's, for example, say my account balance is $1,000. So my risk on that gets determined by this little block here. So if this thing goes red, it means that I'm exceeding my trade risk. So currently it's green, so it's fine. So let's, for example, say I want to trade $1,000 or $500 at 5 leverage. All right. So it means that $100 of my collateral will be locked up. And if I lose that trade, I only lose $14, which is green, which is still fine, which means my risk management is still good. Let's, for example, say I take $1,000 trade size. All of a sudden it turns red. So it means like I am exceeding my risk management. So what we can see is busy happening here. I had a lot of losing trades, but I'm not burning through my capital quickly. So, only lost about 4%. So it gives me the opportunity to refine my trading, to become better at it. And also, when we get to these positions, when you start refining your trading and you get to these positions, your profit target in our case historically in the last 2 weeks was more than 1 to 5. So it means that all of these will be exponentially higher, although my risk management is capped at 2% of my trading capital. So that means that we are on the right track, provided my trading skills get better. So this is why I made this sheet. So this helps you and myself to look at a position. So let's just take this position, for example, here. So let's say I want to enter at $35. My stop loss is at 34. So it means I'm willing to lose 14% of my trade size. My profit is 50%. So it means here is my risk management between that and that. So it means that I'm willing to sacrifice 14% of this trade size, but if I make my profit, I am going to make 214%. Obviously, this is in line with leverage. So if your leverage is 1, this gives you the actuals. But in this case, it's going to be 5. So I'm willing to lose $28, but then I make $428. So that's a very good risk reward rating. All right. So let's say you want to keep within your green block. So we saw at 500 it was still green. So let's say 650. So let's say this is our trade size we want to take. And you can see your capital risk is only 1.86%, which is fantastic. So let's say, for example, you want to broaden your stop loss to $30. So now all of a sudden we see, goodness, we are sacrificing $92 as a potential. That's close to 10% of our capital. So it means that we have to amend this size. If you're sure about this trade, if you're sure that the stop loss needs to be very wide and you're fully confident this thing is going to go to $50 and you want to keep your risk reward at 3 where we want to be. So this means now we need to lower our trade size to at least $200 or even less. So let's call it roughly here. So it means that if you want to take a trade size or a large position of a risk reward ratio, which is still good, of 35 entry, $30 stop loss, and only take profit of $50, then it means your trade size must come down. All right. And the same goes for if you want to have a tight stop loss. So let's say it's $1,000. Let's say you say 34.5, which is very narrow, but just, if you want to, then you can increase the size to come close to this. You can come to 1,300. Well, it's probably going to 450. So you see you're at your 2% here. So it means then you've got a very tight stop loss, but I mean you've got a very high target, and you've got a risk reward of 1 to 30, which is, well, it's very good if you get that. But you mustn't aim too high on that. That needs to be at least 3. All right. So this is a summary of our second week. The third week has started off much better. So one thing that I also want to make notes of is my good and the bads. This is not really relevant to the weeks. I probably will soon. But one thing that's starting to turn out good for me is my entry levels. My entry levels was very good. And then probably all of them, once I take the positions within the few hours, they're all in positive. But then my bad thing is my stop losses, because I get wicked out badly and then the trade goes exactly like I planned it to go. So I need to work on my stop losses for the next few days. That is my, call it my main goal, is just to focus on my stop losses. Analyze, get some guidance from DXS just to where I should put my stop loss, because there was a bunch of trades, Link, Solana, a bunch of them where my analysis was very good. The entry levels was perfectly spot on, and then I get wicked out, and then the position just continues the way I thought it's going to go. All right, so I'm going to clean up this sheet. So next week it'll look something like this. So this will give us a nice little chart of what's going on with our account. Okay, thank you for watching. Please subscribe and stay tuned for more analysis.